This is going to be live on Facebook? Oh my God.
Okay, I'm going to tell you what to do. 1 second. Oh my God, I look bald headed. Okay.
Look at me. I'm like, oh my God, but we
Oh,
can do this.
all right.
All right.
And let's see. Okay, we are live on Facebook. So go to, hey, you guys, go to your Facebook page. Oh no, don't go to your Facebook page yet. I got to go to mine and let me see. Let me go to my Facebook.
Wait, you doing it now?
Yeah, we're live, but
Okay.
I need to go to my Facebook real quick and find us live. Let's see. Um, Audience and go public. Say, so you could go to your Facebook and you could, I mean, go to your Facebook and find me and you can hit share. But so you guys, did not expect to go live today, but we are going live because I got somebody on here that's going to give you answers to your questions about rent to own. All right. Y'all get on my nerves asking me about these rent to own. So we got it. Did you find me on, did you go to your Facebook and find me on your Facebook and hit share, sis?
Oh, you want me to do that?
Yeah.
Okay.
Mhm.
No, I don't have it. I don't, that would take a moment.
Okay. Okay. That's all right. You can just do it later on.
Yeah,
Okay. 1 second.
absolutely.
Let me go. Let me see. We're gonna let people check.
So should I share my screen or I'm
Um,
not sure
I'm
I'm
gonna give
sharing
you
now.
permission in 1 second.
Okay.
Okay.
Hmm.
Let's see. Let me go to my Facebook real quick and okay. So I'm going here and let me make you go back and make you ghost.
Okay.
All right. Welcome, welcome, welcome. I know you guys, I usually do this on Tuesdays, but I was meeting with one of my favorite lenders and I was like, let's just go live because people ask me about this all the time. She goes, well, wait a minute, I'm not ready. We was both like, we're not ready. But
I just came from the gym.
yeah, she just
So
came from the
like
gym.
I'm sweaty still, but we're doing this.
Yes, we are doing this. Okay. Last minute, don't matter. Thank God y'all can't see our whole bodies and everything.
Right.
so, so I got Angela. She has helped me with a few clients and everything. She is one of the top lenders in the area that I trust. Okay. And if you guys know me, you know it takes a lot for me to trust you and stuff. So I'm going to hand it over to Miss Angela. She's going to be talking about this rent to own program that she has. And you guys, we're going to give you the contact information after she presents. Now this session is for realtors and for clients. So realtors, get with her because I know you're like me. People are like that can't get approved and all this stuff and they want to know about the rent to own. We have somebody that's legit, okay?
Yes,
Because
absolutely.
let's face it, too many scams out there. That's what I
Absolutely.
tell people.
Yeah.
When they ask me, they be like, what about the rent to own? I'll be like, most of the time it's scams.
Yeah. Hmm.
So we have a legit one right now. So Angela Whitaker, please take it over.
Oh, 1 second. My screen just stopped sharing. Hold on.
Okay.
course, this is going to happen right
All
now.
right, you guys, she's getting it together, getting it
Now, give
together.
me 1 second, guys.
And then let me see if anybody's no views yet.
Okay, here we go. Okay, here we go. So I'm sharing my screen now.
Did it go?
Yes.
Oh, here we go. Here we go.
Okay, so like Alita said, a lot of everyone is wanted to have a lot of questions regarding the rent to own program. And before I start, my name is Angela, and I am a loan officer here in Roseville, California. However, this rent to own program is for the entire state of California. So if you live in California, I am your loan girl. I do loans. That's what I do. So with regards to the rent to own program, so normally when we're looking to get people approved for the FHA program, one of the criterias would be the debt to income ratio on the back end side normally would be about a good 57. So with this with this rent to own program, we're able to go up a little bit to 60%, right?
Whoa.
And then also FICO scores normally will have to be 580 and or higher. With this program, we're able to go down to like at least 540 with the FICO score. And then we're also even able to do get you approved if you don't have a FICO score. Again, if you had 2 jobs, if you're working 2 jobs, normally we need for you to be working for at least 2 years. This program, again, it will only call for 1 year of employment work in 2 years. And the same thing with work history. We normally need for you to be working 2 years on your job to qualify for traditional FHA loan. In this program, we only need for you to work 1 year. And keep going down that line with regards to if you have a spouse and you wanted to get a home and you did not want your spouse to be included on that because your spouse their debt may not be great or whatever the reason may be, or you guys are in the process of separating, FHA, we will have to use the non-borrowing spouse information, their income and their credit profile, well, their debt. Let me just say their debt will have to be included into your debt to income ratio. With this program, you can get qualified and exclude your non-borrowing spouse information into getting qualified. So that's pretty good because typically you will have to get a conventional loan to get qualified without your spouse. Another thing, if you go on bank statement, to get into a bank statement program, normally it would be bank statement. We would need at least 12 months bank statements. And then a lot of times you'll have to put at least 10% down. With this program, again, you will only be putting the regular 3.5% down because it will run parallel to your traditional FHA loan. So we will only need 3 months bank statements with 3.5% down. And okay, I was going to say my computer just stopped again. Wage earners can go state it too. So if you do receive a W-2 and you wanted to say, well, I want to use my last 3 months bank statements, you're able to use those last three-month bank statements to get approved. Rental income, we can use that. Interest earnings and or dividends and your assets can be liquidated, and we can use that to get you qualified. One of the good things about this program is if you had a bankruptcy, you can get qualified for this program 1 day after you receive your discharge. So that's pretty exciting news. So you wouldn't have to wait 2 years to qualify to get into a home. This rent to own program, you can get qualified 1 day after bankruptcy. One
So
of
that's
the
just for chapter 7. Hey, Pamela.
Yes, that's for
Oh,
chapter
Paula,
7.
that's Paula Smith watching. Hey, Paula. So
Hi,
chapter 7
Paula.
is 1 day and chapter 13 is 1 year, right?
Yes,
Okay.
chapter 13 is 1 year, but chapter 7 is 1 day. So yes, let's be clear. So one of the things you need to have to qualify for this home is good rental history. So a lot of the things that we will do is we will do a VOR, which is verification of rent, and we want to see at least 12 months of good rent history. Or let's say if you don't have a FICO score, well, in lieu of a FICO score, they may say they want to see 24 months of good rent history. So those would be some of the things that we'll be looking for.
So I have a question. I have like
Qualify,
one
yes.
client.
Mhm.
She does IHSS and she lives with her client, but the bills are in her name.
The bills are in the client's name.
No, in my client's name, but she lives with
Okay.
her client. So she doesn't have like a lease or anything. So what if somebody's like renting a room or, people, nowadays people are trying to save and stuff.
Mhm.
How, I mean, how would that
So
work?
what we would need is verification of bank statements that that rent is being paid to whoever is getting paid from, right? So who is she making the payments to? If she's not outright renting the home and have a property manager or something like that, whoever she's making those payments to, we would need to at least see 12 months of bank statements to show that this rent is getting paid every month around the same time. So
Okay, and I think maybe she does the yeah, I have to ask her about that, or maybe just utilities are in her name because she takes care of the person. So
okay.
yeah.
Okay. So another other ways to, well, we're going to change this up a little bit regarding some of the new rules. Of course, you have to be a US citizen to qualify. Non-occupant home buyers are allowed. You definitely will have to stay in the home as your main residence. Gift funds are allowed. Up to 6% seller concessions are allowed. Here's the thing. You are responsible for putting 3.5% down. Down payment assistance and or grants are not allowed in this program. You can, I said finance, you can finance your closing costs. That's allowed, meaning if you find a home, if you're approved for 300,000, you find a home for 280, and then you get with that seller and say, we would like to purchase your home for 300,000. In return, please give us the $20,000 back for our closing costs. So that's something you can do. So no down payment assistance and no grants for this program. You will have to be responsible for making that 3.5% down, and you can get it from gift funds, or if you have a retirement or something like that, you can probably pull from retirement. So that will be one thing that you will have to be responsible for paying. The rest of your closing costs, again, you can get the seller to pay for them with seller concessions.
Now, what do
Um,
you mean by non-occupant home buyers allowed?
if you are, if for someone who, let's just say you want to help someone get a home, but you have no intentions on living in the home, but you want to help with the income. So you can put your name on the loan. You can be a co-borrower on that loan, but you're not you do not have to live in the home. So that's a non-occupant co-borrower.
Okay. Okay, and I'm not sure if I'm jumping ahead. So how does it work with them picking the home and, how does the process really
Yes, so
first
let's get
start?
into the fun part. You are jumping
Okay.
ahead, but we're
Okay,
going to
I'm
get
sorry,
right
y'all. Y'all
into
know
it.
I always jump
So
ahead.
I do apologize. This is last minute. So this right here was not prepared. So it is small print, but I'm definitely going to walk you through this.
Yeah, they
So,
wasn't gonna read anyhow. They want to hear.
oh, okay. So yeah. So with regards to this program, the way it will work, you will go out with your realtor, just like any transaction. You first of all, you would have to get pre-approved. So you will have to submit all of your documents to me, and then what I would do is I would get it all together so that you would actually get pre-approved. The file will get underwritten by the lender, right? So once you're approved, then you meet with your realtor. Your realtor go out and do what he or she would normally do, start looking for a home. Once you find a home, you get in contract with that seller. So once you get in contract with that seller, the next thing that will happen is there will be this addendum. This addendum will say that you will have to sign the addendum and the seller will have to sign the addendum. And what that addendum would be, it would be for the buyer and the seller will be saying that they understand that the person buying the home from the contract would be this third party entity, which would be the bank. The bank would be buying the home for the buyer, right? So we will have to transfer the name from the buyer's name into the bank's name. So that would be the first thing you do after you find a home. The second thing is the process would still be the same. In addition to your regular closing fees, one of the things you have to do, you have to pay the program, you have to pay for your appraisal. You have to pay like a program underwriting fee. That would be about 1,250. They will have like a 1 month complete monthly payment, almost like your first month rental payment, or like a deposit if you were doing a rental. That amount will also be about $1,250.
Oh, these
So
are upfront charges?
these are not upfront charges. These will be part of your closing costs.
Okay.
The only upfront charges you will have would be your appraisal fee, your credit check fee, and your inspection fee. The home inspection fee, as well as the pest inspection fee. So all of those inspections are definitely required. So there is no waiving those
Good.
inspections. You have to find a home that is not a fixer. So it has to be, that home will have to be approved, and it's easy to get the homes approved as long as where you're finding a home that's livable, and they can pass all of the appraisal, the home inspection, and the pest inspection.
Hey,
Uh,
Corey, I need you to pass this information on the rent to own. Go ahead.
Yeah. So a little bit about the program. So realtors, once your buyer closes on it, so you will go through the normal closing process, and then your buyer will pay for their closing fees. So buyers, now once you move into your home, this home is yours. So every month that you make your quote unquote rental payment, right, to the bank, it will go towards your mortgage. So if you're buying this home today for, let's say, 380,000, and you live in that home for like a year, making your monthly payments on time, your monthly payments will include your principal and interest. They will also include your property taxes, as well as your homeowner's insurance, right? So you'll make that total payment every month. So if your home costs 380,000 in a year, by you making those payments, okay, in a whole year, now your cost, the value of your home would be 370,000, or whatever, however amount of those payments are, because it's going directly, the payments that you make is going directly to that mortgage payment. And so the cost of the home will go down. The cost of the home will never change. I mean, so you're in it, meaning your monthly payments or your rent will never increase. So you don't have to worry about in a year or 2 or 3 or 5 years even for your rent to increase. Your rent will always stay the same because it's it's a 30-year fix. So when you purchase this home, you will sign a rental agreement and or a purchase agreement with the bank, and it will also give you a purchase option. So the way they have this program is set to really help you get into a home, because again, when we qualify you, we're going to still really qualify you based on an FHA loan, right? So when we say that the debt to income ratio on the back end is 57, but this program is allowing you to go up to 60, well, that's giving you just a couple of years to keep working and to get more income while you're on your job. And then also it gives you a chance to increase your credit score if you were at a 540, and or if you were approved with a 1 year work history, well, work 1 more year, and now you have a 2 year work history, and you can qualify. So the good benefit of this program is, once you're ready to qualify for this home, well, now you can just contact the lender and you can assume the loan, right? So you don't have to do anything. You can just call them up, I'm ready. And if you don't know that you're ready, you can call me up and I can say, let me look at all of your credit profile, and then I can let you know, yes, you're ready. Contact the bank and let them know that you're ready to assume that loan. So that's how they have it. So they really have it structured so that you can become a homeowner. Also, at closing, one of the things that they do is that agreement that you have with them, that agreement that shows you your perch option, it will be recorded with the county that you live in. So it's a real document. It's nothing fake, meaning you're in this. A lot of programs will say, hey, or landlords say, come, hey, rent this home. It's a rent to own program, but you never will really own that house. This way, this program is really targeted to try to get you to become a homeowner. So here's another good thing about it. Let's just say you're in the home and you're making your monthly payments and you decide that you're going to move out of state or you no longer want this home. Well, now, again, let's say you purchased it for you can turn around and sell the home. So let's just say the home is now worth 500,000. You can sell the home for 500,000, pay off the loan to the bank, give them their 380. The rest of that equity, that's yours.
Oh,
So
wow.
you're able to get the benefits of being a homeowner because this equity will be yours. You're already locked into the equity. You're locked into the payment. So, or if you another thing, you can refinance it if you want to. But if you decide, whenever you decide for your purchase option, you will be assuming the loan and your loan will no longer be 380. It will be whatever you have paid off right at that point. So it's a really good program. Now, one of the other, I'm going to say hidden fees, the interest rates are high. So the interest rate for this program is
Oh, okay.
7.865%. Very high. Why is it high? They're purchasing the whole home on your behalf, right?
Yeah.
What if you get in there, you're not making your more rent slash mortgage payments, and or what if you just vacate the home? So now they have a whole home that they purchased for you. You went and picked it out. So because of that, yes, the interest rate is very high. So once you do assume the loan, well, then you will want to quickly refinance it to get into a lower interest rate.
Okay, that's what I was wondering. So after you assume the loan, how far can you refinance?
You can refinance as long as you can refinance that home as long as you have enough equity in it, and the credit is there, the debt to income ratio is okay. When you refinance, you have to leave at least 80%, I'm sorry, 20% into that home. As long
Mhm.
as there's 20% of equity, you can refinance.
Okay, so I want to back up a little bit. I know some people have joined. Hey, you guys. So what's the lowest credit score we could do for this rent to own?
We can do no FICO. We can do 540.
Okay,
If you're
fine.
a little under 540, let's talk, because if you under 540, you have good rental history. So we probably will not want 12 months. We probably a 12 months verification of rent. We probably want 4 years verification of rent, or maybe 3. So it all depends. So if you have bad credit, let's talk and we can see, because they will take at least one trade line that will have good credit. That one trade line, it could be your utility bill, it could be your cell phone bill. We just need to see something that you have been paying for 12 months that is in good shape with
Okay.
no late, no defaults.
And if you guys have bad credit, don't forget you could get with me too. We got that great AI software to help get your scores up, and also to report, your current rent and stuff too, to help boost your scores and stuff, plus other tools. No FICO, 540 the lowest, and they also need 3.5 3.5%, right?
Down.
Down.
3.5% down of the purchase price.
And that 3.5, can it be gifts or no?
Yes, it can be gifts.
Okay,
It can
that
be
three.
gifted.
Okay, so what that means, I know we got some people on here. So what that means when she says gifted, that means a relative, not 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 the neighbor next door, right?
Not Pookie in
Yeah,
them.
not pooking them. It has to be a relative that gives you the money. And most of the time they have to show that it was transferred for their bank, and sometimes show that it was in their bank, right,
Yes.
Angela?
Mhm.
You
Yes,
want
absolutely.
you want
Yeah.
to elaborate on that?
Well, all of the money has to be vetted. So we will want to see a bank statement. If if you don't have it in your account, so the person gifting you the funds, we will want to see that the funds have been in their bank statement. So we will need at least maybe 2 months bank statements showing that the funds have been in that account for at least 2 months.
Okay, cool.
Yeah.
All right. And then so get a, so they get approved with you, they find out how much they can, go shopping for. We go
Mm-hmm.
out, we find a house, we let the seller know that it's going to be pretty much transferred to an investor's name, correct?
Mm-hmm. Yes, absolutely.
Um yeah, and then does the buyer sign the buyer doesn't sign the
So no, the buyer will not
yes, I thought.
sign the agreement because the buyer technically is no longer purchasing the home. So the bank will be signing all of the closing documents, right? So the buyer will pretty much be signing a rental agreement at that time at closing.
Okay, and that's like the buy before you sell program too. It kind of
Oh,
works that
okay.
way. Yeah, because
Okay.
I just did a buy before you
Mm-hmm.
sell. So she went and picked out the place. The
Mm-hmm.
investor put their name on it, and then they closed. She had to put some money down. It was like a big chunk too, I think. And,
Okay.
and then once we sold her house, then she was able to go and get it from them and stuff.
Mm-hmm.
But she had like 90 days to sell her house and stuff.
Oh, yes, yes, that is true. With that program, a good 90 days.
Yeah.
And then
So
from my
with this
understanding,
program,
the bank will buy it if it's not sold within the 90-day time.
yeah, yeah, or she would have to start paying rent to them and
Oh.
stuff. Yeah,
Hmm.
that's what it was. She would have to start paying rent to them. So with this one, there's no like cutoff on how long they could do the rent to own. Because girl, some people I do for like
Oh, good question. So this program, it's a 40 year. So they have a 40-year
a
purchase
40.
option.
You said
A
how long?
40, 40,
What?
40-year purchase option. So basically, if they stay in the home for 40 years, with that purchase option, by the time 40 years, that mortgage would be paid because it's just a 30-year mortgage. So, I mean, so again, win-win, meaning you have a way to purchase a home. This program is really getting you towards purchasing a home.
Oh,
So you
wow.
can use your option to purchase that home anytime from the day we close up until 40 years.
40. Y'all,
40
40
years.
years?
Mhm.
Wow.
Yeah. And
Oh,
because most traditional mortgages run for 30 years.
okay. So it's a 3.5 plus the appraisal fee and the other fee and stuff, right?
Yes. So
Is there any other part of the do they have to pay for all the closing costs?
yes, they do have to pay for the closing costs because it's like they are purchasing this home, which it
Okay.
will be their home. So what I have been seeing with this program is they are responsible for that 3.5%. The rest of your traditional closing costs, if we can get the seller to pay for that, I think that would be better, right? Because,
Yeah.
if without that, I would be able to get the buyer into down payment assistance and grant programs for first time home buyers. But because of this program, it's the rent to own program. They say no down payment assistance and grants are allowed. So let's have the buyer only pay for the down payment and let's have the seller to pay for the closing costs. So that would be paid with seller concessions. So that's
So
when
it's
we need the realtors to get out there and negotiate great deals to get the sellers to pay for the closing costs.
okay. So it should be, I'm gonna say like 6%, you guys. So if you're
Yes,
approved for
no
like
more than 6%.
400,000, have 6%. And remember, you cannot do down payment assistance program on this. Um, can they, okay, a couple questions. Can they buy a
Yes.
condo and can they buy um like a duplex and live on one side?
This would be for condos and single family residents.
Okay, so they wouldn't be able to buy like a
I have
duplex
to
and live
look
on
and
one
see
side.
regarding duplexes. I'm not gonna say no and I'm not gonna say yes. So I will have to get back to you guys to let you know if it will work for a duplex.
Okay,
Yeah.
okay.
Mm-hmm.
Wow. Man, any questions? Well, we got some folks watching.
Oh, okay.
So, no, this was good. This was
Yeah,
good.
it is definitely a good program. Again, I mean, it's really geared to getting people into homes. So if you're just not ready right now to purchase a home, well, let's do the rent to own program. Get you in a home. You have 40 years to get your stuff together to use this option to buy. And at that point, I mean, again, the mortgage more than likely will be paid off. So let's go.
Oh my
Let's
goodness.
get it together.
Yeah. Wow. Now what about so that you said the DTI, the debt to racial income, could go up to 60%.
Yes, yes, it can go, the debt to income ratio for this program, typically for FHA, the debt to income ratio would be 47 front end and 57 on the back end, cannot exceed these. So with this program, the debt to income ratio on the front end can go up to 50, and on the back end it can go up to 60. So that's allowing you to get more of a home. So sometimes a lot of people get approved and say, oh, I can't find a home with this. I need to be approved for more. So this is allowing you to get approved for more. And what happens is then we know, at least I know, that in order for you to turn around and use your purchase option, well, while you're in the home, you need to continue to work and get your raises. And once you start making a little more money, then yes, you will qualify for a traditional mortgage with the 47 on the front end and 57 on the back end. Does that make sense?
Yeah.
Yeah.
What made them come out with this, and how long do you, I mean, and how long do you think this program will be around?
I hope to be around for a while. I know a lot of rent to own programs kind of come and go, right?
Mhm.
So we'll see. I haven't heard anything about it's gonna end soon. So hopefully we can get as many buyers into the program, especially with summertime coming up. Let's try to get you guys into a home. Rent to own first. It's just, crawl before you walk. Let's get you into these homes, and then, then turn around and use your purchase option to actually get the home.
Okay, so so the investor, so the buyer, I got my realtor hat on, you know me. Um,
Hmm.
so when we do pick a home and our offer is accepted, the
Hmm.
investor sends the earnest money deposit, the EMD.
No, the buyer. So the buyer is paying for everything because it's their home, right?
Okay,
It's their home.
okay,
So the buyer will pay the earnest money deposit. The
okay.
buyer pays the earnest money deposit. The buyer is paying the closing costs. It's just like they're purchasing the home, but the home will not be in their name. It will be in the investor's name.
But they send that money to the investors held in like an escrow account.
Yep, yep,
But the investor's the one, like when when the seller's title company gets it, it's coming from the investor, but the investor already have the buyer's money, correct?
yes,
Now,
yes.
does the buyer have to put the like the 3.5 in before we go shopping, or
No, 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 no.
okay,
Just like closing, it will be on closing day, right? So they
okay,
will have to transfer their money right on closing day.
okay,
After they sign with the notary, then they'll have their funds wired over to escrow. At that point, the bank, of course, will send their money, right? And then from there, they send it directly to the seller to close the deal.
okay. So the buyer, with regard to the earnest money deposit, they just send it to the
To
the
escrow, to
escrow.
escrow.
Okay, and
Just
it'd be
like
held in
it
escrow.
would just be like a regular, for you as a realtor, it will be your regular transaction, except it would just come out of once you're in, come out of the name of the buyer
Mhm.
into the investor's name by executing that addendum. And
Okay,
then once that addendum is signed, then everything else will still be a normal transaction, but they will be signing all the they'll be signing all the loan documents, and we'll be working with them at closing. The buyer at that point will be signing like a rent to own type of agreements. The home ownership purchase program, they'll be signing all of those disclosures.
okay. Now you guys, just want to let you guys know, when she's talking about inspections, you have to, just like a regular buying a home, right? But the buyer's responsible for inspection. So you're gonna be paying for a home inspection, you're gonna be paying for a pest inspection, unless If the seller already has these done, um, you know, it depends on what company it is. I may tell you to go ahead and get your own, but like for instance, I had a client one time and the seller had already had inspections done, I guess from a previous buyer, or they did it. I saw the name of the company. I suggested to my buyer, I said, I suggest you get your own inspections. Thank God we did, because when my inspector went up in the attic, he came down and he said, "What was the fire from?" Girl, they had put new boards under charcoal boards.
Wow.
There was a fire. They put new boards up there and still had the burnt boards up there. It
Oh,
would have had cost my
oh,
seller, my buyer $16,000 because the roof would have to
wow.
be removed.
Mm,
When the seller, when he bought the place, he just put a roof on and didn't take the burnt boards out.
mhm.
So we
Wow.
wind up backing out. So I need to also disclose to you guys, there's going to be times where you guys do a home inspection and the seller may not be willing to fix some things because we will
Absolutely.
do a repair request and you might need to back out. Now, home inspection, pest inspection, sewer. Y'all need a sewer
Yeah, sewer.
inspection
Yeah,
also.
absolutely. Sewer.
I
Hmm.
know yeah, one of my clients, it was $8,000 it came back as a sewer.
Whoa.
Yeah,
Yeah.
8,000.
Yeah.
So that's
I've
money
seen it.
you guys do not get back. Watch that. But I'd rather you guys lose that money on those inspections than get a house with a whole bunch of problems. All
Yeah,
right.
and those termite inspections are
Pest
critical.
inspections,
The
yeah,
pet, yeah, the pest inspections. I've seen some homes come back with those reports, 12,000,
yeah,
18,000.
yes.
Because,
I
yeah.
know the one, when I was just talking to you about,
Mm-hmm.
hopefully that one, I already talked to the seller about, getting a pest
A
inspection
pest
and
inspection
stuff.
for sure. Yeah, without.
Yeah, but you guys, those inspections are never say, "I want this house so bad, I'm not getting inspections, I'm gonna waive it." You're gonna come into
Mm-mm.
a whole bunch of
No.
problems. Even if the AC looks good, the AC could be something wrong, not because they check and see what the temperature is like.
Mm-hmm.
Now, pest inspection, a lot of people will say, "Oh, well, I don't have rodents and blah blah blah." It's not rodents, y'all. They check for termites, they check for leaks, they check for dry rot, they check for other stuff. So that is so important. So Angela, I know y'all, I'm telling you, I think me and her, it was just supposed to be me and her, right?
Yes.
I say, "Girl, let's go live on Facebook." She goes, "Girl, I just came from the gym." I said, "Oh, here, look at me." You know? So yeah, we both had our phone. So we going live. So we went live, I think, because so many people asked me, and I'm not the only realtor out
Yeah.
there.
It's
What about
really,
rent
it's
to own?
really a good program. Again, like there's so many rent to own programs and they just don't have it where you really have the opportunity of owning the home. I think they just kind of say that they're going to take this money and put it aside and save it for you for so it can go towards your down payment. Well, you don't need that because there's plenty of down payment assistance programs. So if it's down payment that you are needing to purchase a home, well, we have that for you. But if it's other things that are holding you back from renting or purchasing a home, give us a call. And that's something that we can talk about and we can figure out if this rent to own program is for you.
Right. So, okay. Remember, there's a lot of scams out there. We got a legit one right here. Angela, please give them your information and stuff.
Yes, I
So
can be.
let me clear. She's the lender and I'm the realtor. So go ahead, Angela.
I can be reached. I'm on Instagram. My tag is at Angela Do Loans. So that's where you can find me. If you can get this number, my phone number is 707-514-5965, or check me out on Instagram, Angela Do Loans. I'm your loan girl.
Right. And
Yes.
this recording of what you guys will see it, you guys can always go back on Facebook and watch it. But go to my YouTube channel. It will be loaded in a few minutes. Sessions with Alita. That's SESSIONSWITHALITA on YouTube. And this will be uploaded. This is where you guys can find all my recordings. On Tuesdays, I do real estate. On Thursdays, I do the music interviews. So I already have home inspections up there for you guys, 1031 exchange up there, and homeowners insurance, about homeowners and renter insurance. Okay. So this is great. Um, realtors, y'all need to get with Angela because like I said earlier, we always get asked, what about rent to own? What about rent to own? And then y'all go on Facebook Marketplace and get scammed and stuff. Stop.
Yeah.
You
Stop.
know, and start going on. People still go on Craigslist.
Oh, I hope not.
So,
That is
like,
very old.
yeah. So, all right.
Yeah.
Is there anything
Okay.
else you want to tell people before we jump off?
No, I think that's it. I mean, call me if you're a realtor, definitely call me so we can talk and so we can get some of your buyers that was denied or that that's trying to purchase a house, have them to give me a call and let's see if we can get them into a home. Let's one family at a time. And if you are interested in buying, just call me and from there I get you a loan and I'll send you to Alita, because she's a great realtor that I know, so she can help you find a home.
And
That's what we do.
let me put this out there. You say all California. So
Yes, California. If you're in
if,
Los Angeles, let's talk.
okay,
San
LA,
Bernardino, let's talk.
okay,
San
yeah.
Jose, we're talking.
And I
So
can interview
everywhere.
I can interview realtors for you guys out there. So
Yes.
make sure you
Yep.
guys get a good realtor because we can, it's always good to have a realtor that you guys know to if
Yep.
you guys are moving out of state or to another city, for us to call interview because we know what questions to ask on how to screen, to make sure you guys get, pretty, good realtor stuff. Can't guarantee it, but we could try. So
Yes.
all right. Okay, so that's it. Rent to own program is here, you guys. Y'all better jump on this now. 1 year in job history, right?
Yeah,
540.
one year job history. So if you've been working for 1 year, you're good to go. You're ready. If you just one day out of bankruptcy, Chapter 17, you're
Seven,
ready.
chapter
If you
7.
don't have a FICO score, you're ready. If you have a FICO score below 580, maybe about 540-ish, could be 530, you're ready. So there's a lot of different ways that if you think that something is holding you back from being ready, give me a call and let's talk about it because more than likely you are ready.
I have a question about that. The FICO scores.
Mhm.
So the rate is 7 something, right? Now,
Yes.
y'all, let me tell you, when I first started 23 years ago in real estate, rates were 9%. So
Oh,
yeah,
okay.
remember they were 9%. So if their score is higher, like in the sevens or something, and maybe they just have like an issue with the, job with the traditional stuff, is the rate better or is always 7?
It's 7.875%. Again, the bank is taking a risk on you. You're in this program for a reason, and whatever that reason would be, it means you could not qualify for traditional financing. And so therefore, by being in this program, the bank is taking a risk on you. So there is a higher interest rate. One thing to note, if you're kind of close to meeting your goal as far as being qualified for a traditional mortgage, this program is not for you. I will say go ahead and wait 4 months so that you can get to that job, or check with a credit repair specialist so that we can see what's going on with your FICO to try to get your FICO up a little bit. If you know that it's about to increase in 30 days or so, this is not your program. This is for people who are maybe.
Uh-oh. I think she froze you guys. So she froze. But anyhow, rent to own, rent to own. All right, we lost Angela, but we got a good session out of it. So that's all that counts.
About let's talk. But if you're right there, Alita, are you there? Oh,
Yeah,
okay,
there
you
you go.
froze a little
Yeah,
bit.
you froze up.
Okay. Yeah. I thought you froze. So it was me. Okay.
Uh, I think, hopefully, yeah. I don't
Okay.
know. But maybe that's our cue to go. So,
Yes. Okay.
so
Bye. Call me.
Rachel, I see you on here. Get with her. She's got the rent to own program, sis. She got me into the
Yes.
real estate business, actually.
Yes.
Rachel's the one that got me into it.
Oh, okay.
So
Hi,
yeah,
Rachel.
yeah.
Rachel, call me 707-514-5965. I'm Angela at Angela Do Loans. YouTube, Instagram, TikTok, Angela Do Loans. That's me.
All right, sis. Thank you. Go enjoy
Okay.
the rest of
Bye.
your day. Okay, and I'll get this recording to you.
Okay.
All right. Goodbye.